Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So today, I know the intro video was a bit different, and the main reason this is FX Pesa now has 100% first-time deposit bonus. So if you haven't started your trading journey yet, so make sure to check it out. It's capped at $5,000, which means that if it's your first time deposit and you have $5,000, you get a $5,000 bonus. So on today's market snapshot, we'll be talking about the top highlight events that we expect to be moving the markets today. So key focus will be on the European Central Bank interest rate decision, as well as the US inflation report, or what we call the Consumer Price Index, short for CPI. So we'll go through those events to understand what they mean, how they might impact the markets. And once we cover these, hopefully everyone will trade from an informed perspective. So remember, this session does not constitute any form of investment advice. It is not a recommendation to trade, so you should always do your own due diligence. So kindly give me a sec. Need to share something. Done. So let's get into the economic calendar and try to understand what are the prevailing events for the day. So as you can see, and this is forexfactory.com website on the calendar page. So today being Thursday, the 11th of September, we've had quite a number of developments in the market. So take it a bit back to yesterday when we had US producer price index data, which basically is a measure of wholesale inflation or the prices charged by producers. So for the core producer price index, we had a drop of negative 0.1%, meaning that prices went down. And this is compared to an expectation of an increase of 0.3% and a prior increase of 0.7%. So the PPI overhead was also down 0.1%, which was also lower than the expected 0.3% and lower than the prior reading of 0.7%. So this basically means that producer prices in the US have been reducing, and now we want to look at the consumer prices. These are the prices that consumers are faced with when they are buying their usual monthly household purchases. So for today, we're expecting the CPI for the month of August to have increased by 0.3%, whereas the year over year, we're expecting the increase to be 2.9% compared to the prior reading of 2.7%. So, of course, there's been a lot of pressure by US President Donald Trump, basically pushing the Fed to cut interest rates to add to 1%. So the Fed, on the other hand, has been holding interest rates higher for longer, mainly because inflation has been persistently high and not yet at the 2% target. So from what we saw with the US non-farm payrolls last week, basically coming in weaker than expected, showing a weaker job market. Then earlier this week, we had the revisions to the non-farm payrolls, leading to March 2025 being revised by 911,000 jobs downwards, meaning that the US job market is much weaker than expected. So with this in mind, especially after the producer price index data that was released yesterday, we saw the US President Trump commenting as follows: too late, must lower it big right now. So in this case, he said just out, no inflation, too late, must lower it big right now. Powell is a total disaster who doesn't have a clue. And this was a directory from US President Trump. So clearly, it will be a big determinant of the next Fed rate decision, which is coming up on the 17th of September. Already the market is pricing in a 25 basis point rate cut, and this is following last month's Jackson Hole Symposium, where Jerome Powell hinted at doing a rate cut in September. So right now the market is split between whether the Fed will be cutting by 25 basis points and whether it will be cutting by 50 basis points. So if you look at the CME Group Fed Watch tool, then you'll notice how the market is pricing in the expected rate cut. So far, we have seen this probability increase from Monday at 90% to today's 92%, meaning that we are almost fully pricing in a 25 basis point rate cut on the 17th. However, the remaining probability of 8% is the traders who are expecting the Fed to go for a much bigger cut, in this case, a 50 basis point cut, which would take the Fed interest rate to between 3.75% and 4%. So in this case, clearly the market is expecting a rate cut. The question is whether it will be 25 basis points or whether it will be 50 basis points. So whenever you see such a high probability, it means that the market is already pricing that in, which means that you don't expect a big move in the market since the market has already priced that in. However, if there is a surprise rate cut of, let's say, 50 basis points, then that would likely cause increased volatility. And of course, when we talk about increased volatility, a rate cut would basically mean a very strong rally in US equity indices, that is the S&P 500, the Nasdaq, the Dow Jones, the Russell 2000, and for the US dollar, we would be expecting further weakness. However, the reaction for 25 basis point is clearly almost priced in. So now we move on to the next data item, and in this case, we'll be talking about the ECB rate decision. So the European Central Bank is set to announce at 3:15 p.m. its decision on interest rate, or what we call the main refinancing rate, which was set at 2.15% 2 meetings ago. And then in the last meeting, they decided to hold steady at 2.15%. And of course, today we are expecting that the European Central Bank will not be cutting rates. So the expectation is that they will be holding rates steady at 2.15%. So if you look at the rate cuts that we've had over the last couple of months, the ECB was able to cut rates from a high of 4.5%, which they had maintained from September 2023 all the way to May 2024. We had consecutive cuts pushing the rates all the way down from 4.5 to 2.15%. So in the last meeting, they decided to hold, and in this case, we also expect them to hold at the current level. So the European Central Bank is widely expected to hold rates unchanged for a second consecutive meeting on Thursday, as policymakers maintain a cautious wait-and-see approach amid stable inflation, a resilient economy, and trade policy uncertainty. The main refinancing rate is set to remain at 2.15%, while the deposit facility rate will stay at 2%. So investors will also pay close attention to the ECB staff macroeconomic projections to be released after the meeting, which will provide updated growth and inflation forecasts. So between June 2024 and June 2025, the ECB cut borrowing costs by 200 basis points, pausing in July. Markets currently expect the rates to remain on hold through year-end, with a potential return of tightening in late 2026. Meanwhile, Eurozone growth is projected at 1.2% this year, 1.1% in 2026, and 1.4% in 2027, though political instability in countries such as France and Spain could cloud the outlook. So that's the expectation from the ECB as of this afternoon, and there is more to the story. So let's look at the euro and how it has been trading since the year started. So since the year started, among the major currencies, the euro has been the second strongest, gaining by 12.88% against the US dollar. So the biggest gainer has been the Swiss franc, which is up 13.56%. The pound is also significantly high, having gained by 8.02% against the USD. Australian dollar and yen, as well as the New Zealand dollar, around 6%, while the Canadian dollar has been up about 3.61%, with the US dollar being the weakest currency in the markets. So this has been happening on a period when the ECB was cutting interest rates. In this case, we have seen quite the opposite, with the volatility happening in the US as a result of tariff uncertainty. Out of investors have been flocking the euro markets. But now things could be about to change now that the Fed is looking to cut interest rates, whereas the ECB is now holding at 2.15%. So the big question is, are we going to see a reversal in Euro USD? And if we get a reversal, how far can it go? So we'll be diving deeper into these on the technical analysis part of the presentation. So other than that, still back on the calendar, we'll be having an ECB press conference at 3:45 p.m. That is about 15 minutes after the US core CPI. So the ECB press conference will be the main point of focus to see if there's any hint of further rate cuts within the year. So if the ECB is conservative and they say they are not focusing more on cuts, then we could be seeing a change in trend in the euro. But then if they promise some further rate cuts, then we could be seeing the euro progressing in its trajectory where it has been gaining against major pairs. So while the Bank of England has maintained significantly higher interest rates, there's a good chance that we could be seeing funds flow into the GBP away from the euro. So with the ECB holding or even let's say pointing at further rate cuts, then in that case, we could be seeing a gain in the pound against the euro. So if you look at the summary here, you will notice that the US has the highest interest rates at 4.5%, though we expect a rate cut next week. The UK is close rate there at 4%, Australia 3.6%, New Zealand 3%, Canada 2.75%, and the euro has the lowest among the majors, 2.15%. So as for the yen, yes, it's low, but they're on a path higher, in this case at 0.50%. And of course, we expect the Bank of Japan to consider hiking before the end of the year. Whereas for Switzerland, due to their safe haven status, that is, the Swiss franc is considered largely a safe haven currency, they had to cut interest rates to 0.0%. And even with cutting interest to 0.0%, we have seen that the Swiss franc has been the biggest gainer this year or since the year started. So clearly for Swiss franc, we expect to see continued strength. But for the euro, we could be seeing a changing trend. So as per yesterday, we also had the crude oil inventories data showing a build-up of crude oil inventories in the US, up 3.9 million barrels compared to the previous increase of 2.4 million barrels. And whenever you see stock increasing, then it likely leads to lower prices. So we'll be doing an analysis on crude oil also in the part of this presentation. So as for the Bank of Japan, found a very nice article here. This is from channelnewsasia.com. So the Bank of Japan is expected to raise interest rates again in Q4. Majority of economists say, and this is from a Reuters poll. So Bank of Japan will raise its key interest rates by at least 25 basis points in the October-December quarter. A majority of economists said in a Reuters poll, down from nearly 2/3 a month ago. So even as markets expect the Fed to cut interest rates next week, 93% of analysts in the September 2 to 9 poll who answered an extra question say that they would not delay the Bank of Japan's push for slightly tighter monetary policy conditions. So all but 3 of 68 economists surveyed forecast no change to interest rates at the Bank of Japan's upcoming September 18 to 19 policy meeting. But then for the Fed, we expect a cut. However, 55% or 36 out of 66 expected the central bank to raise borrowing costs to at least 0.75% from 0.5% next quarter, a decrease from 63% in last month's poll, but in line with July's 54%. So clearly, we're expecting more rate hikes from the Bank of Japan, and we could be seeing the yen begin to show some form of strength later. So other than that, I'm trying to see the highlights as of this morning. So ECB expected to maintain policy rates, US inflation rate expected to accelerate, core steady. European stocks edge up, ECB awaited. China car sales rise 16.4% in August. Dutch trade surplus, smallest in 3 years. Brent halts 3-day gain, and Japan producer prices rise at faster pace. So in this case, a build-up in Brent oil stocks basically means that there's plenty of oil, and as a result, we are seeing prices beginning to weaken. So we'll be looking at that later in the presentation. So as per the bond yields, clearly you can see that they have been mostly slowing down. And when bond yields are slowing down, it means that the markets are stabilizing. So we should be expecting to see more of stronger currencies, especially the currencies that were affected the most, like the pound and the euro. So other than that, on the stock market news, we expect one company to be doing really well today. So Alibaba leads Chinese tech funding spree with a $3.2 billion deal. So Alibaba Group Holdings is leading fundraising spree among Chinese tech giants, driven by soaring capital demands amid intensifying competition for AI. So the company is seeking to raise 3.17 billion in an offering of zero coupon convertible notes that's set to be the year's biggest. The Chinese e-commerce company notes due 2032 will convert into its American depository receipts, according to terms of the deal seen by Bloomberg News. So clearly, there is quite a good number of companies that are issuing debt, and this means that they are projecting that there will be a period of consistently low interest rates, and in that case, they are finding it safe to issue more debt. So Alibaba raised $3.2 billion, China Pacific Insurance $2 billion, Baidu $2 billion, Alibaba $1.5 billion, Grab 1.5, Ping An Insurance 1.5, Make My Trip 1.4, and Chotai Fook Jewelry $1.1 billion. So clearly, we are seeing more companies basically raising funds in order to expand their business and maintain growth. And as a result, a lot of investors are considering Chinese equities. So we'll be looking at how the market is reacting to that in the technical analysis part of today's presentation. And as you can see with the Alibaba stock, so far year to date, it is up 69.43%, and this is quite an amazing performance. So in the last one day, it was down 2.16%, but then in after hours trading, it recovered everything up 2.17%. Of course, now if you look at the last 5 days, the stock is up 8.18%. So I almost forgot to mention that Robinhood is being added to the SP 500 index. So Robinhood, the popular stock and options trading app headquartered in the US, has seen a lot of growth since it got listed in the Nasdaq. So since the year started, the stock is up 197%. And if you look at the past 1 year's performance, the stock is almost up 500%. This is 469.09. So on Monday, the stock jumped 15% after they announced that they would be listed on the SP 500. And being listed on the SP 500 basically means that the broader index funds as well as ETFs that track the SP 500 have to allocate money to Robinhood, which means more demand for the stock. And as a result, we expect increased growth in the stock. So in this case, it's a stock that is up 16% in the last 5 days, and there's a good chance that it might continue performing well later in the fourth quarter of the year. So that being said, I believe it's time we jump into technical analysis territory, try to understand what are the prevailing market patterns, and once you cover this, hopefully you will trade from an informed perspective. So I'll be checking the comment section shortly, try to understand if you guys have any questions, respond as we go. So a good question. Hello, Rufus. When the dollar is weak, does it mean that gold will sell? No. Gold is mainly valued in USD. So if let's say the dollar weakens by 1%, the most likely outcome is that gold will be gaining in that case. So we have seen periods of broken correlations over the past couple of months, but in this case, since today we are mainly focused on US consumer price index, if the dollar happens to weaken, then gold is expected to rally higher. So the opposite is also true. If the dollar strengthens, then the price of gold is expected to move further back downwards. So good morning, Smith FX, and shout out for being the first to join and comment. You can see Midi in the house, Muirori, Charles Palmer, Frederick, Maureen, Wamalwa. Thank you guys for joining. Simon Gikonyo. Also a very good question here. Yesterday, Oracle company gained significantly. So where is the company listed among the USA indices? So this is a pretty good question. Normally, you can use, let's say, ChatGPT to check on that. But an even easier way is to check on heat maps. So I'll be giving you a pretty simple let me try and find one from Market Screener just to illustrate. So you can just search a NASDAQ map or heat map, and then from here you're able to see all the stocks that are in the NASDAQ. So here you're able to identify the stock you're looking for based on the sector. So whether it's technology, whether it's consumer cyclicals, you're able to see the companies listed on that particular index, and you're also able to see the weight. So the weight is the corresponding size of the square or rectangle in the map. So for instance, on the NASDAQ, the company with the highest weight is NVIDIA, judging from the size of the square here. Other companies with a high weight in the NASDAQ include Microsoft, Apple, Amazon, Google, and Broadcom. So you're able to search for that in that order, and you're able to identify which indices have the stock. So clearly, for the mentioned stock Oracle, it doesn't have as much weight compared to the big tech companies, but yes, it's listed in the SP 500 as well as other major indices. So let's get back into technical analysis. Just give me a sec. So I observed a pattern in gold. Anytime we approach New York session from London, gold dips below London session. Why is it so? So it's quite an observation. So we'll be checking that. Also, another comment here. You mentioned that the impending 25 basis point rate cut by the Fed is well priced in, and the focus is now on whether the cut will be raised to 50. Could the 50 also be priced in before the 17th? Well, it's likely, and that is heavily dependent on what we see on the CPI report. So for instance, let's say inflation drops towards the 2% target, or even drops directly to 2%. That would mean that the Fed is mandated to cut interest rates. And as a result, we could be seeing a much bigger cut. So a higher than expected inflation would likely mean we get 25 basis points. But then a lower than expected inflation report then would likely mean a much bigger than expected rate cut. So in this case, the key focus will be on the inflation report that we get this afternoon. So another point, yesterday we had a hotter data release. How should the dollar react, especially when looking at PPI and CPI? So the reaction is pretty simple. If we happen to see a much weaker than expected inflation, then we expect a bigger rate cut, so a weaker dollar. But then a hot inflation would likely mean a stronger dollar. So let's get started with this. So I'll be starting with the key highlight, which is the China's A50 index. So we have seen with Alibaba and other companies raising funds, there is increased investment in Chinese tech stocks, and as a result, we have seen a very strong rally since the market opened today, basically breaking all the way up. I remember on Monday we had identified this rejection here, and we identified that every time we had this kind of rejections, often the market moves further back downwards. So we didn't move down as much as we had anticipated, but now we are seeing a break towards the upper side, which likely indicates continued bullish momentum, and Chinese equities have been doing really well since the year started. You can notice that from around January, when the year started, the Chinese stock market was first bearish in the first 4 months, but now here you can see the A50 index is up 11%. So for the UK 100 index, apologies for that. Clearly, we had about 2 weeks of bearish momentum before breaking towards the upper side last week. So after the breakout, we have seen persistent movements higher, and this week seems more like a continuation, where we now head towards the previous high. So there has been this push, and it has been pushing bit by bit. And so far today, we are seeing some pretty good momentum, looking to retest yesterday's high. So for the UK 100, good chance we keep seeing bullish momentum. Whereas for the Nikkei 225 index, here we are seeing the market headed for a new high. So this has been broken earlier today. So from the H1 chart, we had a breakout, a pullback, and a continuation, and it seems like the market is persistently moving higher, and there is no candlesticks on the left. Market is just pushing higher and higher. So quite a strong bullish momentum, which means that pullbacks are opportunity to continue the bullish momentum. So for instance, the earlier pullback we had was a pretty good entry point for more bullish momentum. More pullbacks we are alive, and once they happen, then we take advantage of those. So as for US dollar pairs, what we are seeing is something that we have been talking about for a while now, that whenever you're expecting a major decision or a major economic news, if the market is priced in or has priced in the information, we tend to see the opposite. So while the dollar has been pretty weak, now we are seeing the exact opposite. So for instance, you can see the majority of last week's price action ended up with a big sell-off in the dollar against the yen. So even though we had a big jump on Monday, the dollar continued being weak to the yen on Monday and Tuesday. But then in Tuesday afternoon, we had a pretty good bounce, sideways momentum yesterday, and today the dollar continues gaining against the yen. So here we are in a cycle where the market just bounced from the lower trend line, and now we are moving towards the upper trend line. So this seems to be the key theme across board, where the dollar index was pretty weak last week, and this week it's bouncing. So if you zoom out from the dollar index, you can see that it's more of a 5-week sideways momentum, but right now it's more of a bounce from the lower side, and now we are headed to the upper side. So with the dollar index being pretty strong, we are seeing reversals happening across other pairs. For instance, for the dollar Swiss franc, we had a big sell-off late last week. We expected this momentum to end around 0.79189. So from Tuesday, we had a nice bounce, yesterday even push. And of course, today we see the continuation of the same, dollar recovering against the Swiss franc, and now a potential push to 0.80220. So clearly, we expect the dollar to remain strong for the day. And then once we get the news, of course, that will determine the next side of the market direction. So for Euro USD, here we are looking at the one pair that will be most affected by both news. One, the European Central Bank interest rate decision, and two, the US CPI. So clearly, the market has been on a channel, and we just bounced off the upper side of the channel, and now we're headed towards the lower side of the channel. So with key targets around 1.16335. So while this remains a possibility, the market is uncertain of what might be the outcome of the news. So in summary, if the ECB comes out as expected, they don't change interest rates, then they point to a potential further rate cut, perhaps in early 2026. That would mean that the euro starts showing some form of weakness. On the other hand, if inflation comes in higher than expected, that would likely strengthen the dollar and lead the euro USD to drop to around 1.16355. But then on the other hand, a much weaker than expected inflation, let's say inflation tends towards the 2% target, then that would point to a likely 50 basis point hike, and that would mean a rate cut that is bigger than expected. So good chance that we see the market retesting the high that we saw on Tuesday. So this would likely be a possibility if inflation slows down more than expected. So for pound USD, we're also seeing the same kind of thing, a market that is stuck on the upper trend line here. So clearly, this has been a major resistance area for 3 consecutive times. And upon hitting this resistance area, we saw rejection and the market moving further back downwards. So as for today, we could be seeing the market rallying and moving to retest the Tuesday's high. And that would be in the likelihood of a weaker dollar. On the other hand, if that is not the case, then we could be seeing the dollar strengthening and the pound weakening to much lower levels. So with key targets being around these 2 previous bottoms. So notice this was a likely nice cycle that could serve as support, and also this other area here. So we could be seeing a push to those areas, and that is in the event of a much stronger dollar as a result of higher than expected inflation. So for Australian dollar, also notice that the CPI day is coming at a time when the Australian dollar just tested a major resistance area. So from a technical perspective, we expect a pullback from here. So from the 1 hour time frame, here if the dollar happens to strengthen, which is the most likely outcome, we could be seeing a sharp drop towards the weekly low, somewhere around 0.65488. So as for gold, we know that we've been hitting new highs almost every single day for the last couple of weeks. So clearly on a very, very strong momentum after we broke out of a 5-month sideways momentum. And now with gold hitting new all-time highs, the real question is, will the momentum continue? So clearly, with the bond news that we have experienced over the past 2 weeks, a lot of investors dumping US and European bonds, leading to a rising bond yields. That spooked the markets, and we saw gold hit a new all-time high of 36.74. But then, at some point, you expect some level of profit taking after this strong bullish momentum. So if the dollar happens to strengthen, then there is a good chance that we see gold going for a weekly low. And the lowest price that we have seen this week for gold is all the way down here, which coincidentally coincides to the prior week's high. So notice the swing high here on Friday broke towards the upper side. Monday we started here, Tuesday we moved higher, Wednesday sideways, and today we could be seeing the market going for this particular bottom. So this is in the case of a strong dollar, gold dropping to 35.79. So that is a likely outcome this afternoon, especially following the news. So if there's even more panic, another key level to target would be this bottom here at 35.10. So if there's big panic and the market drops sharply, then 35.10 would be a nice target. So on the other hand, there is no candlesticks on the left. So if we happen to see a weak dollar, then it's a retest of the prior high. And of course, we venture into the unknown, moving above 36.74. So silver tends to be closely correlated with gold. Of course, on Monday, we projected a high of this point here, which was the previous high. So we got there. Tuesday, we had a pullback. Wednesday, we attempted to move higher. And this shows a market that is basically losing momentum. So while silver had started the week with a very strong momentum, here we are seeing signs of some form of consolidation, where the market is trading in some form of triangle. So at some point, we should be expecting to see a breakout, and the most likely scenario is that we see some form of pullback. After enjoying a very strong rally, we could be seeing the market going for this price action area, and this is around $39.112 per ounce. So this is in the likely scenario of a much stronger dollar than expected. But then if it's a weak dollar, then silver bounces from the lower trend line and pushes to a new high above 41.67. So as for oil prices, we experienced a very strong sell-off as of last week. And then the market bounced strongly in the new week, and we have had 3 consecutive days of bullish momentum. And now on the 4th day, good chances we will begin seeing bearish momentum. So as we had mentioned on Monday we didn't see any signs of short selling. So we mentioned that we should be looking for short selling at some point in the week, and perhaps that day is today. So key thing to observe is various price action areas where the market could eventually break. And of course, from the 15-minute chart, the idea is to look at the lows we have had since the week started, and they are following a very familiar path. So this is some kind of support trend line, and the idea is to go for short selling positions once the market breaks the trend line and starts trading below it. So if it doesn't do that and there's a bounce like the one we had yesterday, then we should be looking for bullish momentum trades. So for US equity indices, we have a double top on the Nasdaq, and the double top basically means that the market pulled back to this neckline several times, failed to move lower, and pushed all the way up, which likely means that we are going to have a break. So the idea is to go for bullish positions once the market breaks above, and it's the same thing across board. So for the Dow Jones on Monday, we mentioned that the market could retest this previous high. So we had some good run, and Tuesday got to the target. Yesterday, another test before pulling back downwards. And today, we are still very nearby. And if the market goes for another retest, considering the impact of the news, we could be seeing a breakout to newer highs. Then also, if we happen to see the market dropping, then the idea is to be looking at this swing low point here. So the idea is to still be bullish, but then if we see a swing low point here, the idea is to be looking for more buys. So SP500 is the one that is closest to its all-time high. So from the forward chart, we have had this channel, basically indicating more bullish momentum. We are very close to breaking that resistance. So clearly, the market is attempting to make one more push. So if you happen to see a dip, that dip would likely retest 64.80. But in the likely scenario where the stock market remains strong, lower inflation would mean a very strong rally in US equities. Then we break above this high and we go into price levels we haven't seen before. So Bitcoin eventually broke towards the upper side. So this was a notorious trend line that Bitcoin was unable to break for 3 consecutive weeks. So this week we have broken to the upside, which likely means that we are heading to the top of the pattern. And this is a price action area around $119,000 per Bitcoin. So good chance that we see this bullish momentum continued. And if you look at the last week's low versus today's prices, you'd notice that Bitcoin is already up 6%. So other than that, looking at other pairs, New Zealand USD is on a major resistance trend line. So if the dollar strengthens, then we move towards the lower trend line. And the lower trend line basically connects these lows, this low and this low here. So good chance that we see the market heading straight for this particular level, and this around 0.58567. So for European equity indices, we are seeing some sideways momentum. Beginning with the German DAX, I would say the overall price action for this week is just sideways. So since the week started, yes, we had a bounce here and a rally. Tuesday was a bit mixed. Wednesday a sharp drop, and today you could be seeing a bounce, and the market heading straight for the upper trend line. So it's more of a swing up, down, up, down, up, down kind of momentum. So for the EU50, if you look at this index and the way it has been trending over the past couple of weeks, trying to clean the chart here, you notice a big sell-off over the last 2 weeks, and this week being more of a recovery week. So from the 1 hour time frame, you notice that we have had this shaping up as the key level support. If you look at the resistance last couple of days around this area here, and today it seems like the market is finding some pretty good support around these areas here, which likely implies we could be seeing a rally from this point. So for the French stock market index, even after their government collapsed and riots happening across France, we are seeing the market responding positively as of this morning. Pretty good bounce from these areas here and pushing towards the prior high. So good likelihood that we see a continuation of the current momentum following the price action of the last 2 hours, indicating bullish momentum. So Swiss stock market index pulled back from last week's highs, went all the way down and found support here. And now we are testing a theory whether the market will be bouncing from here. So here we continue observing to see evidence of buyers coming in. We don't have that yet. So once we see that evidence, then perhaps a continuation of the bullish momentum. So for the Norway stock market index, after the pullback that we saw in the last 2 weeks, the market bounced pretty good. And this week has only been bullish. And from the daily time frame, we are breaking into new uncharted territory, which basically means pushing into a new all-time high. So for the Netherlands, we have had some pretty good swings. Last week, we saw the completion of the bearish momentum towards the lower trend line, and then the bouncing. So this week we pushed even higher before reversing, and it's pretty clear that the market is now pushing towards the lower side, that this is virtually complete, and now we are looking at yet another swing if the market remains within this pattern. So that's it for the day. Thank you very much, everyone. I'll be checking to see if there's any more questions before we end the session. And as usual, remember, we have new episodes on the Bullish Banter podcast coming up every week. So in the last episode, we hosted George FX Mastery. We've had pretty good uptake on the podcast. Thank you guys for sharing the podcast. So far, we have had over 11,000 listeners. So keep sharing your feedback, and we will keep creating good content for you to have much better strategies, much better understanding, much better risk management and understanding of market psychology. So what's the other question here? So as for gold, waiting for it to dip to the daily support around 3,500 before the buy to 4,500. 4,500 is due to uncertainty. That's an interesting take. But the idea is that long term, the trend of gold is bullish. So pullbacks might present way better entry opportunities for buy trades. So also a pretty good question. Me, I'm a new trader and I don't understand anything. How can you guys help me? So we have a course and it's available on FX Pesa's YouTube. So just go to YouTube, search FX Pesa, go to playlists, and then from playlists scroll until you see Novice to Pro. So this is a course I did about 2 years ago. It will basically take you right from beginner content, introduction to trading, charting skills, tradable assets, knowing your candlesticks, market structures, trading strategies, risk management, understanding market news, building a trading system, and eventually trading like a pro. So make sure to check it out. It's free of charge. It's more of self-paced learning. So practice after each lesson, and hopefully by the time we meet on the next session, you will have understood most of these concepts. So also a high when ECB holds the rate and CPI drops, and also considering the appointment of a new French Prime Minister, can we expect to have a field day against the dollar? Well, a field day against the dollar would be when inflation drops around, let's say, towards 2% target. So that would clearly bring in some pretty good opportunities. So also appointment of a new PM in France would likely boost other currencies such as the euro. So that is also in the books. When you say market tends to price in when expecting a major news and behaves otherwise, does this mean that is from a pullback and market will rally off to the expected direction? No, it's more like naturally you expect if a central bank is cutting interest rates, the currency will weaken. So since investors already know this and they know what data the central bank is watching, so if in one of the central bank meetings they say they are observing, let's say, inflation in the job market, and the job market creates such conditions, so the market is expecting the rate cut. In that case, the market will not wait for the announcement. In most cases, you'll see the currency weakening a week or two before the announcement. And once the announcement happens, instead of the currency weakening, you tend to see the opposite and the currency strengthens. So in that order, we should be expecting at least to see the dollar weakening, let's say, late into this week towards next week, and then the announcement could result in the dollar strengthening rather than weakening. And that depends on whether it's a 25 basis point or a 50 basis point rate cut. So we have seen it happen over and over again since the year started. So it has become more of a trading trend. So some Russian official claims the USA will rug pull. It's that $7 trillion debt, which might keep gold bullish for the rest of the year. Well, this is tough. It's a lot of politics, and I don't think that is true. If you look at the crypto market and you try to understand its valuation, then you'd notice that it's highly unlikely that a market that is worth basically $4 trillion, you can see it here, 3.96. So roughly $4 trillion, I don't think it will be able to absorb $37 trillion. So in that case, consider that just politics. Whereas the US is really boosting the stablecoin market in order to have more people issue debt and buy bonds using the stablecoins. That is a long-term process, but for now, it doesn't impact our trading or investing decisions. So also a good question here. Could you briefly explain how to trade news? Like, should I enter the first minute or should I wait? Or if so, for how long? Well, in these sessions, I address different kinds of traders, from longer term traders, technical analysis traders, investors too in these sessions. So when you talk about trading news, are you trying to take advantage of the volatility that comes out of the news? And or are you trying to trade the reversal back to the mean? So trading news events announcements is a very highly risky activity. So unless you know what you are doing, I wouldn't recommend. But then if you understand or know what you are doing, then you should know that in most cases, liquidity in a market will be on the most recent major highs or lows. So if, for instance, you're looking, let's say, to trade CPI news, and let's say you're focused on trading gold, the one thing you should know is where the liquidity areas are. So most of the times it tends to be the most recent highs and lows. So for instance, if you look at gold and the most recent high is 36.74, so most of the liquidity will be here. And if we are looking at moving towards the lower side, we are looking at the weekly low, which was a previous high, 35.79, and here where gold grabs some liquidity before moving higher, which was around 35.10. So knowing these levels, then you're able to work with them. So for instance, let's say the news happens and the market, let's say, jumps down. So if it jumps down and keeps going down, you know that it will still extend until it gets to where the liquidity is. So in that case, you can do a formal trade targeting that area. So if the market, let's say, jumps up and doesn't jump straight to the resistance, then you know that in this case, it will still keep pushing until it gets to the liquidity, which would be 36.74. So I hope that helps. Thank you very much, everyone, and I hope to see you on the next session. So remember, these sessions are recorded. You can rewatch if you missed anything or if you joined late. And you can also share this with your friends, with your communities, with your trading partners, and so on. So thank you very much, everyone, and I hope to see you on the next session. Good question. Can I start with today's news with that advice? No, if you are not experienced, don't do it. In fact, if you're not experienced trading news, just do it on your demo. Trade the next 10, 20, 100 events before you understand how they work, rather than ban your account trading news. So once you practice and understand what you're doing, then you'll make a more informed decision. So there's a question about a WhatsApp group or Telegram you should join. Check out, we just started a community called the Bullish Banter Podcast Community. It's available on Telegram. Check out the links from our socials. So search Bullish Banter on Twitter, Bullish Banter on TikTok, Bullish Banter on Instagram. And from there, you'll get a link to our community where we keep on adding more updates. So we already did the analysis for Euro USD, and as I mentioned, the session is recorded, so you can rewatch it in case you missed anything. So thank you very much, everyone, and I hope that you have a profitable week. As usual, if you don't know what you're doing and you don't have experience trading news, just stay off the markets. But then if you know what you're doing, then you know what to do.